Welcome to The Explainer. You know, every single organization out there, whether it's the coffee shop on your corner or some giant global tech company, it has a pulse, a heartbeat, and it speaks a language that tells its true story. So today, let's learn how to translate it.
Think about it. When you look at a company, how can you really tell what's going on under the hood? Is it actually crushing it and growing like crazy? Or is it maybe secretly in a whole lot of trouble? Well, the answer is accounting. And no, it's not just about crunching numbers in a back room. It is the language, the system, designed to give us a clear, honest picture of what's really happening with the company's money. So that's what we're going to do. We're going to decode this language. We're going to look at its basic grammar, the stories it tells, and trust me, why it matters in a way that goes way beyond spreadsheets. Okay, I know this definition looks a little formal, a little textbooky, but all it really means is that accounting is a reliable system for keeping track of everything a business does financially. You know, what's coming in, what's going out, and what it's all worth in the end. It's how we turn a bunch of transactions into information we can actually use. Now, just like any language, the language of business has rules. It has grammar. And pretty much all of it boils down to one single unshakable equation that keeps the entire system in perfect balance. This right here, assets equals liabilities plus equity. This simple-looking formula is the absolute bedrock of all accounting. And here's the key. It always has to balance. Always. Every single financial move a business makes has to fit inside this one little equation. No exceptions.
So what on earth does that actually mean in plain English? Well, think of it like this. Assets are all the valuable stuff a company owns. Liabilities are all the stuff it owes to other people. And equity, that's what's left over. It's the owner's piece of the pie, their net worth.
Let's make this super real for a second. Imagine you buy a house for $200,000. That house is your asset. It's what you own. But you probably didn't pay cash, right? You got a loan from the bank for $175,000. That's your liability, what you owe. And the $25,000 you put down from your own savings, that's your equity. That's your stake. And look at that. It balances perfectly. 200,000 equals 175,000 plus 25,000. It just works.
Okay, so if that equation is the grammar of our language, then financial statements, well, they're the stories. They use that grammar to answer the biggest, most critical questions anyone could ever have about a business.
And this story basically has four main chapters. You've got the income statement, which asks, hey, did we actually make any money? Then there's the statement of owner's equity, which shows how the owner's personal stake in the company changed. The balance sheet, that's a snapshot of our main equation at one specific moment in time. And finally, the statement of cash flows literally follows the money, showing where cash came from and where it all went. Put them all together and you get the whole picture. And what's cool is that this same language, these same stories, are told by every kind of business imaginable. It doesn't matter if you're a manufacturer actually building the car, a retailer selling that car off the lot, or a service business like a taxi that drives you around in it. They all use these same core ideas to figure out if they're healthy or not. But, and this is where it gets really interesting, accounting isn't just a quiet tool for businesses. It can be a powerful tool for justice, a force that shapes our laws, and a launchpad for some pretty amazing careers. Its impact on the real world might actually shock you. Just let this quote sink in for a minute. The longest ever sentence for tax evasion. Who do you think this was? Some Wall Street mastermind? A corporate CEO who cooked the books? The real answer is way more notorious. That's right, Al Capone. The feds couldn't nail him for murder, for bootlegging, for any of his violent crimes. But you know what they could get him for? His bookkeeping. Or, his complete lack of it. 11 years. He was sentenced to 11 years in federal prison. Not because of bullets, but because accountants, forensic accountants, were able to prove he was making millions of dollars from his criminal empire and wasn't paying a single dime in income tax. The numbers brought him down.
And this power can literally reshape society. Back in the early 2000s, this huge energy company called Enron completely collapsed when the world found out they were using all sorts of shady accounting tricks to hide billions in debt. People lost their jobs, their life savings. It was a disaster. And because of that, Congress passed a massive new law, the Sarbanes-Oxley Act, to create much stricter rules to protect investors from that kind of fraud ever again. Understanding this language also opens up some incredible career paths. Seriously, it's not just about doing taxes. You could be a forensic accountant, like the people who took down Capone. You could be in corporate accounting, steering the financial strategy of a huge company. Or you could be a financial planner, helping everyday people build their own future. It is an incredibly powerful and versatile skill.
So you see, this language of business is so much more than just balancing the books. It tells us the real story of an organization, it helps leaders make incredibly important decisions, and sometimes it's even the key to delivering justice.
In the end, that fundamental equation, assets equals liabilities plus equity, is all about bringing balance and clarity to something complex. It forces a business to look honestly at what it owns, what it owes, and what it's truly worth. So the question I'll leave you with is, how do you balance yours?